Well, Rufas Kamau is joining us live on Zoom. We all know Rufas, and if you don't know him, Rufas is a finance expert and a lead market analyst at FX Pesa and a financial markets brokerage firm that's regulated by the CMA. Karibu tena na tena, Rufas.
Thank you, Anne. Happy to be here.
Now let's just get right into it, or maybe just introduce yourself, maybe just once again. For what I've not said, you can just say it now for yourself.
Thank you. My name is Rufas Kamau, markets analyst at FX Pesa. FX Pesa is a financial markets broker licensed and regulated by the Capital Markets Authority of Kenya. What we offer is a trading platform that helps people access global financial markets.
All right. Now, Rufas, let's just get right into this discussion of the night. Now, what would you say is the financial crisis in Kenya right now?
The financial crisis in Kenya right now is basically a high cost of living, and there's quite a number of things that are contributing to this. So on one hand, we had a series of taxes that were implemented this year. On top of that, we have the Kenya shilling that has been consistently losing against the dollar. On top of that, there is the actual scarcity of the dollar. And then we have the political stability that has just started with the demonstrations on top of the drought that we experienced over last year and some good part of this year.
All right. Now, Rufas, the Kenya shillings continue to grow weak against the dollar, right? And what is really causing this dollar shortage in Kenya right now?
There's quite a number of factors that have been contributing to the weakness of the shilling. On one hand, we can say the U.S. Federal Reserve Bank, or the central bank of the U.S., has been very aggressive in raising interest rates since March last year. So this is the fastest rate at which they have hiked interest rates, literally moving interest rates from close to zero, around 0.25% in March last year, to the most recent hike where they moved interest rates to 5%. So this aggressive rate hike has basically made sure that the dollars are scarce since the Federal Reserve Bank of the US has been tightening policy. So we have seen a lot of global currencies suffering against the dollar. So it's strengthened against the euro, the pound, the Swiss franc, the Canadian dollar, the Japanese yen, Kenya shilling. And the countries in the global south have the ones who have taken the biggest hit. So we saw the Nigerian naira lose over 100% against the dollar. We have seen the South African rand losing at the same rate, and this has been a global problem. So on top of this, we experienced a period where oil prices were consistently rising. So with rising oil prices, Kenya being a net importer, where we import a majority of the products we consume, and our exports don't match the amount that we import, then we find that we are spending more dollars. So with this spending, we realize that a person who was, let's say, importing goods before COVID, they were literally spending about 99 shillings to buy one single dollar. And today, they are getting that dollar in the market at between 130 and 145 shillings, meaning that they have to spend even more shillings to get the same dollar. And this has led to a spiral effect where once the importer gets a more expensive dollar, they resort to hiking the products that they import. And you, as a Kenyan, when you go to purchase your products from your local shop, supermarket, or paying for fuel, you realize that those prices are significantly higher, and this touches your budget significantly. So besides this, there are other factors that have contributed to the weakness of the shilling. One thing is what we call hoarding. So whenever something is viewed as scarce or something that is limited in supply, then people tend to hold on to that asset. So I remember the panic during COVID when a lot of people are holding tissue paper. People would run to supermarkets, buy excess, and store for themselves. And this created an even bigger problem with scarcity. So this scarcity mindset, where every time you go to buy some dollars, you find that the price is higher, and then you go next month, the price is even higher. Then whenever you get hold of those dollars from, let's say, local sources or external sources, you tend to hold on to them because you know that they are scarce and they are just appreciating against the shilling. So there's also been a lot of speculation. We have seen companies run to the dollar. So if let's say you normally operate using Kenya shilling, then you realize that this Kenya shilling is losing consistently against the dollar. Even though you don't need those dollars to do some business, you just go and convert your shillings to dollar to speculate and gain some forex advantage. And this has been a big challenge, especially with our financial institutions. So we have been speculating on the dollar, holding more dollars and dumping the Kenya shilling, which has added more pressure to the shilling. So on top of that, we also have another factor, and this is literally investors moving out of the market. So if, for instance, you are an investor who is invested in the Nairobi Securities Exchange or even in private investments in Kenya, when you track the performance of your investment in Kenya and you look at that in dollar terms, whenever the Kenya shilling keeps on losing to the dollar, then your investment is losing on book. So you look at that investment in dollar terms and realize it's losing, and the main reason this is happening is the Kenya shilling. So this has created a fright where investors now are putting their investments from Kenya and moving them to more stable markets where the currency is not depreciating as much against the dollar. So last point, we have the issue of bonds. So as interest rates continued rising, we have seen a very strong demand for US short-term bonds. So instead of investing in emerging countries where their debts are getting wider and wider, and the central banks run the risk of defaulting on these bonds, investors have been moving their money away from these countries and moving them to more stable countries where the yields are much better and there's a lower chance of default. So this has been quite a consistent theme since last year.
Okay. Now, Rufas, this CBK dollar rate is currently at 127.80 Kenyan shillings. And the black market, I mean, the market you have said is as high as 145. Why is this big difference between the CBK and the black market?
I think there's been quite an imperfect pricing of the dollar. Whenever there is scarcity, I don't know how to explain this. We have seen several times in Kenya where we have had a shortage of petrol. So you go to your local petrol station to buy petrol and you realize that they don't have any supply, and then you move on to the next petrol station. So if you get to a petrol station where the price is much higher, then you'll be forced to buy there since there is scarcity. So in such an environment where there is scarcity of an asset, then prices can be imbalanced in the market. So in this case, we have also seen a lot of imbalance between the central bank rates and what is being offered in the forex bureaus and commercial banks. So hopefully we'll get to resolve this imperfection. I know the central banks recently announced that it's rolling out new infrastructure to help make sure that there is a transparent communication of prices in the forex market. So besides this imbalance that we are seeing, there's also the external factor where you see that the forex bureaus are trying to chip in between the margins that appear between commercial banks' rates and the central bank rate. So if, for instance, the central bank is giving the dollar at 128 and 131, you realize a commercial bank is offering a much higher. Just checked NCBA, there was a difference of about 5 shillings today. So a forex bureau is able to play in between and take advantage of that spread between the rates. So this way, if you go to a forex bureau, you get an advantage of, let's say, 1 shilling or 2 shillings per dollar, and that's how they have been surviving and doing more business during this crisis.
Now, you have also mentioned that investors are now running away from Kenya, maybe. What do you think is in store for Kenyan investors and importers now looking at the dollar shortage in the country right now?
There's quite a number of new developments that have happened in the market. So in the last 2 weeks, we have seen the crisis that started in the US that is the banking crisis where 3 banks collapsed within a period of 2 weeks. So after this, there was intervention measures that happened, and now we are seeing what we call the Fed balance sheet expanding. So this means that these banks are able to borrow short-term from their central bank, and now they have much higher reserves of the dollar currency, which will be expected to be felt in the rest of the global market. So in this case, in the next couple of weeks, we should be seeing more flow of dollars to Kenya and to other countries, and these should weaken the dollar against other currencies. So my expectation is that the Kenya shilling will start to recover. So on top of that, we have been spending a lot of money to buy dollars in cash, which we have been using to pay for fuel every month. So the most recent deal with Saudi Aramco will allow us to spend at least 6 months before we make a payment for oil, and this will allow more dollars to be flowing within the economy. So as a short-term solution, we could be seeing the Kenya shilling start to strengthen back against the shilling. So for a lot of people who are panicking, wondering why the Kenya shilling is keeping on losing, it was majorly as a result of the US Fed keeping the rates high and getting them higher and higher. But now there's a new flow of dollars in the market from the US Fed, and this is expected to increase liquidity, and the scarcity mindset is about to come to an end. On top of this, we have seen major countries such as Russia, China, we have seen Saudi Arabia doing bilateral agreements where they look to solve their trade issues with using the Chinese yuan currency. So in this case, a lot of dollar reserves that they were keeping in order to use that to buy oil, now those dollars will be available in the market to handle other businesses, and this has the overall effect of increasing access to dollars, and as a result, we might be seeing global currencies starting to recover against the dollar. So going forward, for any manufacturer, there's quite a number of options you might be looking into. If you've been buying products from abroad, you might consider buying products that are produced locally. That would eliminate the pressure from the dollar. On top of that, you might be looking at doing business directly with other economies where you get your products quoted and priced in other currencies rather than the dollar. And on top of that, there's also the option of hedging your position. So if you're a business that runs with a lot of dollars and you hold those dollars in order to, let's say, make purchases or payments, then you are basically in a long position with the dollar. And in order to hedge the Forex volatility risk, you might want to take on a position in the Forex market that hedges the risk of having a very volatile currency against the dollar.
Now, for these businesses that have been affected by the dollar shortage, like you have mentioned about businesses as well, what financial layout would you advise for now these business people, manufacturers, and investors?
Yes. So when you are manufacturing some products in Kenya and you really depend on dollar imports, one key thing, as I've mentioned, is to make sure that you hedge that risk. So hedging that risk is pretty simple. You just go to a local Forex broker, take a position in the opposite direction of your trade. And in that case, if the dollar volatility persists and the Kenya shilling keeps losing to the dollar, then you'll be gaining on the other position. So you'll have a net zero on your position. So this makes sure that you continue providing the same products or services that you offer in Kenya without having to take losses in your dollar holdings. So on top of that, I think patience will also be a key thing. So as we see more changes happening in the global financial markets and dollar access coming back into the markets, then if you're patient enough, then at some point towards the second and third quarter, you should be feeling the effect of more dollars in the market. So patience is a key thing. So the other thing, as I mentioned, is to look for alternative ways of sourcing your products where you don't have to use the dollar. So if, let's say, you're sourcing your products in China, then look for alternative ways of paying your products directly from Kenya shilling to Chinese yuan without involving the dollar.
Okay. Now, Rufas, as we wind up, what would you say Kenya should do to curb the plunge of its currency and to make the dollar available?
There's quite a number of things. I think the one thing that is very important, especially for the current administration, is to look at local production. Whenever the Kenya shilling is very weak against the dollar, then it makes our currency very affordable. So to a foreigner, when they were coming to Kenya before COVID, they were getting 99 shillings for every dollar. So right now, every time they come to visit Kenya, either to purchase something, they're getting a little above 126 Kenya shillings on the dollar, and this makes our products very cheap. So whenever you see such a feature happening, it's a very important point to boost local production because you get to make more sales to the rest of the world. So we can take advantage of the weak shilling by exporting even more products that are made in Kenya, and these will be very beneficial. So if the government was to invest in local businesses, not invest directly, but provide the necessary environment that helps people grow, then that would be key. So also making the cost of doing business much cheaper will be very important. And what I mean by this is looking at the base products that are very critical to manufacturing and local production. One of them being electricity prices. So if electricity prices are much lower, then it's easier for a Kenyan producer to produce even more. So besides this, there's also the issue of taxes. So whenever there's much higher taxes in Kenya, then production becomes even more difficult because you are competing with other guys in other countries who are paying much lower taxes. So if you look at those products at the base of the pyramid, in agriculture, we have the cost of fertilizer. We also have the cost of animal feed. All these have direct impact on local producers. Also, sometimes you might consider subsidizing technology. So if you are a local manufacturer and you are looking to, let's say, use some form of technology, import some form of plants that you use to do your value addition, then government supporting you to do this would have a much bigger benefits that far outweigh the current challenge that we are facing right now. So in this case, I would say boost a lot of our local production, take advantage of the weaker shilling, and eventually we'll get a much stronger Kenya shilling.
All right, thank you so much, Rufas, for your input on the Kenya economic outlook. Thank you so much. We are glad to have you here with us always. Remember, Rufas is the lead market analyst at FX Pesa.